I want to do a quick audio visual confirmation, make sure everybody can hear my voice and see the screen. If you could type a Y or a yes in the question section, verify that you can, in fact, hear my voice, that you can see the screen in front of you. That'd be awesome. It's time to get going. Thomas, Frederick, William, Ellen, Scott, Theo, Mario. Perfect. It looks like everything's coming through good. That's great. Let's get going. As we get going, I want to make sure everybody, before we start, understands the risks involved and associated with trading and investing. Please be aware of those risks and willing to accept them. Also understand that I am not a commodity traded advisor. What that means, pretty simple. I'm not here to give you advice or trade for you. However, I am here to teach, show, guide, educate, mentor, and help you on this great journey of becoming a profitable trader and investor. Because I say this all the time, once you learn how to trade and invest successfully, then everything else, as far as your financial goals, your dreams, your aspirations, all of that, it's all taken care of. Type in a Y or yes in the question section if you agree with that. It's just a matter of coming up with a formula that works, that you can consistently stick with. And once you have that, then guess what? You've got everything you need, and everything else will take care of itself. I talked to a lot of traders at the anniversary session this last week, and William, I'm sorry that you missed me, but one of the things that I kept coming back to was the market. This is so important to understand. And I used to teach a lot of classes in person, and I would say this all the time, and it's so important for us to remind ourselves of this. The market's going to be there tomorrow, right? And if it's not, right, if the markets aren't there or open tomorrow, then we have much bigger worries than making money in the markets, right? That means something catastrophic happened, and there's much more to worry about than the market. So the reality is the market is going to open up tomorrow, and there's going to be trading that's going to be done someplace in the world. And so what I need to do, and this is really like one of the thought processes that really helped me turn around my trading career long ago, is I realized I was just in this vicious cycle of just, it seemed like I was taking 2-3 steps forward, 2-3-4 steps back. And I was like, man, I can never really get a foothold and go forward. And I was spinning my wheels. And I realized a lot of it had to do with the emotional side of this business. First of all, because I didn't really know what a successful trader looked like. So that was really important. I needed to get some successful traders in my speed dial. That was very important. But number two is I needed to realize that I can't live and die by every single trade or every single trading day or trading week. Because the market is going to open up tomorrow. It's going to be there tomorrow. I need to make sure, first and foremost, I need to make sure that I am there tomorrow, right? If this is how I'm going to generate my income, and the markets open up tomorrow, then I need to make sure that I have the ability to trade and invest tomorrow, which means I need to trade with proper risk management. I need to understand and have confidence in my strategy, and be able to analyze the markets, not only analyze the markets, but actually be able to participate in the moves when they happen. How many of you have analyzed the markets well, and you've done everything, A to Z, and you got a perfect trade set up? Let's say it's a swing trade, and it's a trade that's, should have hit its target in the next month or 2 or 3 months, and you know what's going to happen. Then let's say 3 months goes by, the market works out, and it does exactly what you thought it was going to do, but you didn't make money, or you made a fraction of what you should have made. Type in a me if that's happened to you. I'll tell you, that's one of the most frustrating things that can happen to a trader, any trader, whether you've been in this business a long time or whether you've just started it. It doesn't really matter. There's two types of traders. There's the trader that is afraid to lose money, which is okay. It's all right. It's all right to not. I'm not afraid to lose money. I just don't like losing money. Right? I don't like losing money. I don't know anybody who likes losing money. But I'm not afraid to lose money. Typically the traders are either afraid, one, have a fear of losing money, or two, have a fear of missing out. Which one are you? I'll bet you probably fit within one of those, even if you've kind of mastered it. You're either somebody who started out, maybe when you were first starting, you were more fearful of losing money, type in a 1 if that's you, or number 2, more fearful of missing out. I personally was number 2. I maybe started out as a number 1, but I for sure grew into a number 2 really fast. The reason why I grew into a number 2 fast is because there was never any doubt in my mind that there were people making money. And so the way that I looked at this is well, if there are people making money and I'm not, then I am missing out. And my fear, and I overcame this, but my fear was, well, geez, I can only miss out so many times before maybe those opportunities don't present themselves anymore. And it just takes some time in front of the markets to realize, well, that's just crap. I mean, the market always presents great opportunities. We just need to be prepared, ready, willing, and not emotionally distraught, not to a point where we're all beaten up emotionally where we can't push our button, right? Because there's also a point where some of you have got to, and I pray that you're not at this point right now, where you know what you're doing, you have the skills to do it, you analyze the markets, but you're so paralyzed by some of the losses that you've taken, yesterday or the day before, the week before, the month before, that you're not pushing the button now. Type in a me if that's been you before. Even if it's not you right now. Those are the things we need to overcome, those habits. We need to stop doing, it's this easy, guys. Stop doing what doesn't work and start doing more of what works. I used to talk to students all the time, and I tell them, there's a lot of knowledge within your trade history. I would tell them, I'd say, go back into your trade history and look at the trades that you took. Look at your losers, look at your winners. Analyze the market, the trades that worked, and find the correlation in the ones that worked. Find the reasons why and things that can be duplicated on the reasons why they worked, and then find the ones that didn't work and find out what bad habits or what things you consistently did, if there's anything, and how you can eliminate the things that don't work. It's that simple. And so today I'm going to talk about some of my favorite trades, and I'm going to talk about a strategy that I think every person in this room needs to have. I think I could sit here, if you and I together, let's say we're having a one-on-one meeting, I don't think there would be anybody in this room that could give me a valid argument why not to place one of your trades on a grid trade. So I'm going to show you the style, and I'm in a lot of these trades already. I'm going to show you a style that I plan on taking pretty much every single one of my trades. Now, it's not going to change the way that I trade. I want to make this very clear. I'm not changing the way that I'm trading. I still love targets. I always will love targets. Absolutely phenomenal strategy. I trade primarily with the major AB sequences, but I am going to pretty much place every one of my trades from this point forward using the grid. Type in a me, M-E, in the question section if you've heard about the grid. If you haven't, well, then you must be, must have been sleeping under the rock over the last week, right? And if you have heard about the grid, well, I'm super glad you're here. And most importantly, if you have and you haven't taken advantage of it, then my job today is to push you off that fence and to have you make a decision for it to get this in your hands. And I'm going to try to do everything I can to convince you of that and take the risk off of you. Okay? Yeah, Scott says, I can't wait. I agree. Michael's excited, has it already. Rick has it. A lot of you already have it. That's awesome. Okay. So here's the deal. Let's go through a process that I use, and then I'm going to give you guys, I was only going to do this last week. I did this on Thursday and Friday of last week, but I feel bad, like really bad, that some of the students that were in the anniversary session, maybe here locally in Florida, or attending online, I feel bad that some of you didn't get access to one of the gifts that I gave last week. So it's a strategy. Now I want to also mention this before I show you this strategy. It's going to be my gift to you guys. Before I show you the strategy, I want you to also know that I'm not telling you to change your style. If you're already a target trader, a leveling student, or a mastermind student, or whatever it might be, continue down those paths. If you are potentially looking for a good entry strategy, a strategy that can give you a place to trade to, then I'm going to show you that today, and one that you could potentially adopt, right? And so that's going to be my gift to you guys. How many of you, type in a me if you were with me Thursday and Friday last week when I shared this strategy with you guys? And if you weren't, type in a no. I just want to know like the mix of students. Okay, Dennis was at the anniversary. I know a lot of you were at the anniversary, which was great, and I'm glad that you were there. So that's mainly the reason why I'm going to, I was going to only share this for Thursday and Friday, but again, I want to make sure that everybody has an opportunity to maybe add this to your toolbox. Again, it doesn't have to be the only way you trade. It's another good way to look, look for trades. Okay, all right. So Pound New Zealand. Let's talk about the Pound New Zealand. And let's talk about the Pound New Zealand. First thing we need to do, and before we place any trade, there's 3 core questions. And I say this all the time, but I think it's worth repeating in probably every webinar I do, which is the first question we need to answer, regardless of the style of trader or strategy you use, is what direction is the market most likely to move in next? Type in a wire yes in the question section. Helen, shalom, thank you from Israel. That's awesome. Hopefully you're having a great trip. Type in a wire yes in the question section if you agree that that is the first place that we need to start, regardless. Now, some of you might say, well, you kind of, Tyson, but I'm a non-directional trader. I trade within consolidation, et cetera, et cetera. Well, it doesn't matter whether you trade within consolidation or not, or non-directional trader. Only true non-directional traders that exist are options traders, by the way. And we're not here to talk about options, so therefore, if we're not trading options, we have to take, whether you're trading within a channel or not, we have to take some type of direction. And so we have to ask ourselves, and at least come up with some type of logical conclusion on which direction that we should trade in first. After we come up with that direction, so for example, target traders, it's very easy for target traders to understand the direction that the market should be moving in next. If you have a missed or an on-hit target 500 pips above current price, well, target traders know that the market is most likely to move higher to that missed target over the course of time, so therefore we should probably start to structure trades to the long side. That's the reason why I love targets, is because it answers that first question really, really easily. And then it also answers the second most important question, which is, where is the market most likely to move to? So once I know the direction the market's moving in, or I have a clear logical way of defining the direction, then I need to say, okay, if it's moving up, let's say, well, where's it going to move up to? And if it's moving down, where's it going to move down to? Type in a wire yes if you agree that that is probably number 2, the second most important thing. And there's an argument to be made, well, wait a minute, Tyson, is that really the second most important thing? Well, it is, because, I mean, risk management is obviously very, very important. And that's really my number 3 is at what price am I wrong? So there's a level that I've got to be able to say, okay, we're moving down to a certain level, and at what price at a certain level of price. If I'm wrong for a certain amount of time, well, at what price am I going to get out of the trade, and am I just going to say, you know what, I'm wrong? But for me to kind of come to a conclusion on whether I should take a trade or not, I got to first know, obviously, the direction and where it's moving to. After I know direction and where it's moving to, then I can start to, ask myself the question on, okay, can I structure a trade in that direction to that level and give myself a logical area, like a stop level, that gives me enough reward in comparison to risk? And so these are the 3 main questions before I place any trade. It doesn't matter what strategy I trade. These are the 3 main questions I ask myself. And so as we go through today, I want you guys to think about those 3 questions. Think about these 3 questions. And I also want you to think about these 3 questions in the context of what you already do. What you already do, whatever strategy you trade. So I'm going to go through one of my core strategies, one of the core ways that I trade, which is I trade very heavily with the Fibonacci sequences. I am a very, very big fan of wave analysis and Fibonacci sequences. So if I were to only look at this picture right here, how would I answer question number 1? If this were the current picture, and this is the current market environment, and this is all I saw, would I be thinking the market is most likely to move up or most likely to move down based on this? Well, just based on this, I've got to believe that, again, and I know this because I've been doing this for a long time, the market moves in waves. Now, this is a really big, it's a longer term, much more of it like a swing AB sequence. But I've got to look at this and believe that the market is going to eventually find its C retracement, which shouldn't surprise us at all. This is the AB down right here, which means that it's right now price is trying to find its true C retracement and then going to put in, eventually going to make an attempt, at least an attempt. Now, it may not get all the way down here. It may not get all the way down to this D extension, but it's going to at least make an attempt to get down to that D extension. Right? The bears are not just going to roll over and play dead and just be like, oh, okay, we suck. Okay, bulls, you go ahead and just, eat our lunch, right? No, the bears are going to come in. They're going to remember, wait a minute. Everything's not rosy over in Great Britain. Wait a minute. This whole new election coming up in June, that actually might not be that bullish for the pound, because here's the thing that might expedite the Brexit process. Once Brexit happens, Great Britain's negotiating power and leverage in the world is going to go down. It could potentially mean multi-decades of weakness in the pound. I'm not saying that right now, right here, but what I am saying is that if I were just going to bet on the direction of the pound over the next 5 years, let's say, I am going to place a bet to the downside, not to the upside. Type in a wire yes in the question section if you understand that. So that's based on my opinion of what I think is going to happen with the whole Brexit process. And also, it's nice when I can tie opinion into what's also happening on the charts. So this is nice. This is an AB down. Then when I can combine that with something that looks like this is my favorite pattern that exists in the entire market. I've said this many, many times. I'll say it many, many times in the future. If all I did for the rest of my life, if I did nothing else but trade only this pattern on a daily chart, I would do very, very well. It's a down AB with a retracement. At the same time, while this AB is looking for its C, well, that B to C movement's going to also put in an AB wave, right? So this is the AB wave up. We get in a weak attempt. We can see here that we made an attempt to retrace. We then failed. So this attempt to retrace, we then failed. And how many times have you guys seen this happen before? When we fail to make a 382 retracement and then we start to break above the B. How many times have you seen this since we've been talking about this? Break the B, close above the B, and go to between the 118 and the 127. Type in a wire yes if you're like, wow, I'm starting to see that thing happen constantly. Yep. It happens all the time. All the time. And so there's a potential trade that you could have set up here to buy. Was anybody in some of the webinars about 2 weeks ago where I said I wanted to start buying if we break above this? I took this trade, wanted to start buying up there. I don't know if some of you were here or not, but yeah, it's Sam says it happens every time except when I trade it. Yeah, hey, listen, Sam, or everybody else, you can't live thinking you've got market monsters over your shoulders, right? No, I know you're kidding. I know you're kidding, Sam. Okay, so there was a nice buying opportunity there. But a quick question, real quick question, and this is good for education. Is this a trade right here, this buy right here, is this a trade that we should be aggressive on, or should we take it in a conservative way, maybe less size? Maybe only go half the size half the risk we would normally take. We should probably trade this, but let's trade it conservative because we're trading this bullish position in the face of a longer term downtrend, right? So we got to remember that. We got to keep that in mind. Okay, so with all of that in mind, this right here gives me a double bearish bias because we have this down AB which is going to be ultimately the real driving force, the long-term force, this down AB. On top of that, we have this up AB without a 382 retracement. And now that we've broke the B, went to between the 118 and the 127, you guys will see this happen, well, for the rest of your trading career. If you haven't seen it happen a lot yet, and I'm sure a lot of you have, just go back into many, many charts and you'll see this break above the B, go to between the 118 and 127, reversal pattern. Where's the next move most likely going to take us? Can anybody tell me where the next most likely move is? Down to the 382. It's down. And that's where we're heading down to. Now, I'm already in this trade. I'm already in this trade. And I'm in this trade very happily. I'm in this trade with, I personally don't, I'm not worried about this trade. I'm going to give you a conservative way to enter. And then I will give you the way that, that if I weren't in it, the way that I would enter right now. And so the conservative way to enter would be, well, let me just ask real quick. Is there any clues as of right now with this current price action up here? Is there any clues that price is starting to break down? I mean, there's some signs, right? There's some signs, but there's nothing major. We won't get it, the major sign until actually today's bar is going to help us out. The fact that today's bar is going to create potentially a new pivot low, right? And yeah, we have a tweezer top. I get that. Potentially a new pivot low. That's potentially going to help us out on the downside. So if we can get a break below today's low and a close below today's low, the most conservative way to trade this would be on a break and a close below today's low. That would be the confirmation of this potential breakdown. And that would be also if you go into a shorter time frame, correct me if I'm wrong, but I believe if you went into a shorter time frame, you would probably see you've got some type of crowning pattern sitting here. Don't know for sure, but probably, maybe. And so if that's the case, probably something like this actually. Awkward looking crown, but anyway, Jason says there is. Good. Yeah, I can see it kind of. It's not a beautiful, it's not a great looking one, but I can see that there is reversals or potential for reversals starting to happen. Now, today's bar is actually not as bullish as we might think. Today's bar would have been very, very bullish if we could have basically the same exact bar. So what we did is we broke below Friday's low, and then we broke above Friday's high. If we would have broke below Friday's low, and if we close above Friday's high, that is a bar you do not want to touch at all on the short side, especially until we can get a break. But here's the deal. If this bar can close within Friday's close, that's actually a decent sign for the bears that they were able to battle back and close it within Friday's price action. Now, it doesn't confirm anything yet. The confirmation will come on the break of 81.70 on the downside. That's the most conservative way to trade this. And actually, to take it one step further, the conservative way is to trade on a break of 81.70. The ultra conservative way is to trade on a break and a close of 81.70. Type in a Y or yes if that makes sense. Okay, so I'm going to type out the ultra conservative, and this ultra conservative way has probably got about a 70-80% probability of success. So some of you might say, well, it's worth waiting because the success rate is so high. Why front run it if the success rate is so high if we wait? And I'll agree with you. I'll agree. You know, waiting isn't going to be a bad thing. I'm going to show you how I'm trading it though in a second. But short on a break and close below 181.70. Target 1 75.13, stop. Now this, what I want to see is I want to see us break and close on as a conservative trader. I would want us to break and close that 81.70 without trading above 83.45. So my stop would be about 83.55. That would be my stop. And so now if I'm asking myself the question, number one, do I have a clear direction I need to trade in? Yes or no? Number two, do I have a clear area where we're going to go to? Yes or no? Number three, do I have a clear area on this trade where I'm saying, okay, I'm wrong? Yes. So I'm able to answer all three questions, and I'm able to put the probabilities in my favor because we know the 80-20 rule. We know every A-B sequence within the market has an 80% probability of retracing to a 382. Okay, so here's the trade. Very, very conservative trade. If you want to be an ultra-conservative trader, this is the way to trade it. Go ahead and take a snapshot of this picture and type in done when you got it. Lennox, you could. Yep, I'll talk about that in a second. Lennox asked a really good question. We'll talk about that in a second. I'll actually show you how what's going on using the Keltner channel and moving averages is actually confirming this. So this is a really nice trade here. This is a trade that is going to offer 660 some pips of profit and 180 pips worth of risk. That's pretty darn good. That's pretty darn good. 80, what is 81? Oh, sorry. Right here, 81.70. 81.70 is today's low. So that's the reason why. So the ultra conservative trader will essentially wait until, because this is a bullish bar. It's not an extremely bullish bar, but the conservative trader will wait until we can get a break and a close below today's low. That'll give us an indication. That'll break a 3-day low, and that'll give us an indication of the next push lower. So, okay. So here's the way I plan on trading it. And by the way, even if you're an ultra conservative trader, you can trade this same style. Let's say you trust that the market is currently starting to reverse. You trust that the market is currently starting to come down. And you're like, you know what? I like this trade a lot, and I'm going to give it a little more room on because we haven't got a confirmation of a turn of an absolute turn yet. So here's what I'm going to do. I'm going to give this a little more room. There's an interesting level sitting up right about in here. That'll be difficult to get through right around this 84.56 level. And so if I place a stop at this 84.56 level, so it's called a level of supply. I don't have a whole lot of time to go into the reasons why, but just trust me, that's going to be a hard level to get through. So if I place my stop up there, and let's say I went short right now, let's just hypothetically say I short right now, my target's going to be 720 pips, and my stop is 225 pips. Do I have enough reward in comparison to risk to take that trade? Yeah, absolutely. Absolutely I do. For sure. And so I would like to give myself a little more room on the stop and have the same exact target, but get in a little sooner instead of waiting, you know, price to fall 60 pips. I don't mind getting in right now, and that's the reason why I'm already in this trade. So the way that I'm doing this is I'm going to place my stop up here, up at this 84.56 level, or put it another way, I'll place it at about 84.65. And I'm going to have my target, I'm going to link this over to the 60-minute chart. I'm going to have my target down to 75.13. And so ultimately I'm going after about 720 pips. And so here's the reason why I'm willing to get in right now, because I am going to use Josh's grid trading formula to get into this trade. And Angelo asked a good question. How long will it take to hit this target? Well, I mean, for a trade like this, it's probably going to take at least a few weeks. At least a few weeks. I mean, we're talking 700 some picks. I mean, it could happen faster than a few weeks, but it'll take at least a few weeks. But what if there was a way that you could get your 720 pips this week and get another 720 pips next week and get your another 720 pips the week after and another 720 pips the week after and do it 2, 3, 4 times while it goes down to 75.13. Type in a wire yes if you'd be more interested in trading that style. Because we know where the direction it's going to. We know where it's the price is going to. So now let's try to capture as many darn pips as we possibly can on the downside. Let's try to do that. So here's the way I'm going to trade. And here's actually the way that I am trading it. So I'm going to go to the matrix. I'm going to set this up as a grid trade. And I'm going to do 10 grids. And what I'm planning on doing is I'm planning on if price rallies up, I want to sell more. If price sells off, I want to sell more. And so I'm going to set this up and I'm going to trade both sides because as long as price stays below 84.65, I want to sell. As long as price stays essentially between those levels, 84.65 and 75.13, I want to sell. And so this is how I'm going to do it. My distance between, I got to do my calculation. This is the formula that Joshua Martinez came up with. What you do is this. It's a 4-step formula. All right. Step number 1 on a 500 bar chart. So on my swing trades, I am going to use a 1-hour chart for my swing trades. On a 500 bar chart, measure the distance between the high and low. So let's measure. Let's do that. Let's measure the distance between the high and low. So we got 600 and we got 700. We'll just round it to 700 pips. So we got 700 pips of distance. So that's 700 pips. All right. So that's step number 1. Step number 2 is this. Take the total distance and multiply by 3. All right, what does that get us? Well, it's 700. That gives us 2,100 pips. Number 3, divide that number by 2. And some of you already come up with a faster way, but I'm going to stick with Josh's. Number 4, divide that number by 10. And so what this gets us is 1,050, 105. So there's a question on why. Why? So here's the reason why. So when you use this formula, what we can't do is I can't trade, you know, a grid that's 100 pips wide on the Euro Swiss when I'm going to trade a grid that's 100 pips wide on the pound New Zealand. They have different daily trading ranges. They have different volatility. So using a formula like this helps us set grids up, and it's actually a formula that Josh has tested over time and has actually come to the realization that you can actually set this up in a way. I'll give you an example. Josh uses he's going to teach in the course what's called a no-brainer way. So the no-brainer way is basically to go to any chart, measure the distance, go through these steps, measure the distance, times 3, divided by 2, divided by 10, come up with the grid, and be able to do this. Go to the matrix, go up and down, put the grid 105 pips apart. You want to do both sides. We'll just say buy, didn't matter, buy or sell or whatever, and just run this and essentially do this. Close all the trades at the same level. So if your grid's 105 pips apart, you close all your trades at 105 pips worth of profit. And Josh has tested this in many market environments on tons of currency pairs, tons of examples, tons of time frames, and it's basically a strategy where it's just like almost a no-brainer strategy where you don't even have to have direction or anything. You can just go to a chart, set this up, and forget it, and it makes money like 90% of the time because of the way that the market moves. Now, if you're thinking about it, how in the world can that happen? Because the market sits and consolidates between 70 and 80% of the time and only trends 20 to 30% of the time. So as long as the market is in somewhat of a consolidation mode, then this strategy should be able to make money a lot of times. But here's the deal. I'm not going to trade it in that way. Well, the way that I'm going to trade it is I'm going to trade it as a professional trader, right? And so what do we know? I'm going to set up an actual trade that I would normally get into. So this is a normal trade I would get into. So trader one, I could get into it right now, have 720 pips worth of reward, and my stop would be 225 pips. As a grid trader, here's what I'm going to do. I'm going to set it up the same way, but I'm going to use the grid. I'm going to set up 10 grids. I'm going to do both sides. My distance between the grid is going to be the same formula, the formula I just came up with, which is 105 pips. I'm going to do both sides. I'm going to sell, but here's the deal. If I took this trade right now as a normal trader with a target down here and a stop up here, I'm looking to make 720 pips, right? Well, I'm going to have this grid close for a profit and reestablish the trade every time it gets a 720 pips of profit in there. I'm going to set my prop, and I'll show you what this looks like. I'm going to set my stop at 184.65, and I'm going to set my target at 175.13. All right, before I hit OK on this, type in a wire yes if you understand. I'm looking to go short right now. My stop is up here. My target's down there. So I could do that just as a normal trader. I could just put this trade in and I'd be good. Or I could trade it like a grid trader, have the same exact 720 pips worth of target, and then every time I get the 720 pips of profit, reestablish the grid. How would that look? So watch this. So now in a second, I'm going to hit OK, and you're going to see a bunch of orders go into the markets. Boom. Done. So now what I want you to think about is this. How could price, so the question is how long will this trade take, right? That was a question. How long will this trade take? Well, I don't know. I can't tell you how long. It's obviously not going to just fall in a straight line, right? So it's going to wave. And is there a chance that we could see it wave maybe in a pattern that looks like this? Yes or no? Could you possibly see this wave down in a pattern that maybe looks like that? Right? If it goes down to our target. So trader number one, this trader that just took the normal trade made 720 pips and hey, great, good to go. Well, how did the grid trader do? Well, here's the deal. Every one of these lines, the grid trader is getting short. So the grid trader took a short right here. And every time, if it rallies up, entered another short right here. And then it fell. We're already in this level here, so we didn't add. Keep falling. Took another short right here. And then took another short right here. And so let's do the math here. Remember, our target's 720 pips. So with all of these combined, do we have a 720 pip target yet? Let's just see. This trade here, this trade all the way up here is up 300. If somebody could do the math for me, that'd be great. This trade's up 320 pips. This trade here is up 215 pips. This trade here is up 114 pips. Actually, let me go all the way down here. Sorry about that. Let me start over again. All the way down here, this trade here is up 375. So take 375 plus 265 plus 160 plus 55. How much is that? Anybody get that total? That's 855. So by the time price reaches right about here, type in a wire yes in the question section if you understand that the grid trader took their first 760 pip target. Right there, right about there. Bam, done. First trade, done. Well, here's the thing. We still want to be in this trade, right? We booked 760 pips, and that's awesome, but we still want to be in this trade because, well, we haven't went up and hit our stop yet. We haven't hit our target yet. So now we've got 760 pips here, so that's awesome. So what do? Well, we reestablish the grid, and then we go short again here, short again here, short again here. And by the time it gets down by the time it gets down into this level down in here, well, we've got 375 again, 265. By the time it gets down right about in here, bam, we get another 700 plus 760 pips. All during the same time, right? So the grid trader took 760 pips out of the market right there, took 760 pips out of the market right here. How much has the normal trader made? If the normal trader shorted right here and is in the trade down to here, the normal trader is up 365 pips. Sam, the reason why I'm using 760 pips is because that's my initial target. So the decision I have to make is, do I take this as a normal trader and make, I'm sorry, not 760, it was 720, sorry about that. The reason why I say 720 pips is because if I just take this as a normal trader and short right now at the target down there, it's about 720 pips. But if I take this as a grid trader, I can book my 720 pips, and it doesn't even have to even go down halfway if price moves within a kind of a wave-like sequence down, and I can get 720 here, I can get 720 here. Okay, so am I done? No, I'm not done. I'm going to do the same exact thing. So now I'm going to short again here, short again here, short again here, short again here. And by the time we get down to this target, this trade here is up 400. We booked another 760 right about in here. I'm sorry, 720 right about in there for our third 720. And then we short again here. And that last trade would make the grid trader about 95 pips. So the grid trader, by taking the same exact trade with the same exact stop and just trading it on the grid, would have traded this entire sequence, and I'm going to mark these off so you know what I'm talking about. This entire sequence would have made 720 pips. This entire sequence would have made 720 pips. This entire sequence right here would have made 720 pips, right about, actually to about here. Would have made 720 pips. And then this one, this last one, would have made about 95 pips right here. So the grid trader made 720 pips 3 times, and then at the end made about 95 pips. Took the same exact trade. The grid trader is up 2255 net, plus 2255 pips net for the grid trader. How much is the normal trader up? How much would the normal trader be up? 720 pips. So the normal trader made 720 pips, took the same exact trade, and the grid trader made 2255 pips. The grid traded it. Now another thing that I want you guys to understand is this, is that grid trading is going to accomplish 3 things. First of all, let me just ask, yes or no, does grid trading obviously help you capture more pips? Yes, I'm telling you, take however many pips you're going to capture or you have captured over, let's say, the course of the last month, and times that by 2, 3, maybe even 4, and that's the number of pips that a grid trader is going to capture. It's going to be 2, 3, 4 times more pips. Number 2, really, really importantly, number 2, grid trading increases your probability of success, and it helps you be able to reanalyze the market by getting out of a trade with a profit and analyzing if your thesis is still valid. Tyson, what in the world do you mean by that? Okay, so after we book this first 720 pips right here, we're pretty happy, right? Well, the normal trader is up 220 pips, but let's say that some news event came out. And we're like, geez, man, we thought we were going to make 720 pips on this trade, but a normal trader is only up 220. Well, as a grid trader, you're up 720. So if some news event or something came up and your thesis now changed, your short bias now changed for some reason, you already made 720 pips, so you're not going to be mad about, you're not going to have to go through the emotional cycles of saying, geez, do I really want to get out of the trade, yes or no? You're going to happily get out of the trade because you've already got the 720 pips that you're looking to go for anyway. Type in a wire yes if that makes sense. So it's going to increase your probability of success and lower your stress in the market. It just is. And number three, and this is probably the most important thing, and I don't know if a lot of you guys put enough value on this, but it's very valuable to me, and I think as you progress in this business, you start to realize how valuable this is, which is number three, this gives you back time. This gives you back your time. As a grid trader, if I normally set this trade up, I could just set this trade up and just let it do its thing. But because I know I have a higher increase of probability in this trade, I have a higher chance of making money, and I'm going to make much more money. Type in a wire yes if you understand that my job is done. I don't have to manage this. All the trades are in the markets right now. All I need to do is walk away and let the markets do what they're going to do. So there's three really big things. And this is why I believe all of you need to at least give us 30 days to get this thing in your hands, to test drive this thing. Because I'm going to give you guys a satisfaction guarantee. We've got 11 more, which is blew my mind that we even have any left, but I guess we have 11 left of people who are going to be able to get the satisfaction guarantee. And I believe that it only makes sense for every trade you take from this point going forward, at least for the next 30 days, is test this out. See if I'm right. See if this actually doubles or triples, maybe even quadruples the amount of pips that you would normally make. Over the next 30 days, let's say you make 1,000 pips. Well, what if this triples it? What if you can make 3,000 pips? Now extrapolate that over the next year. Honestly. So I made 28,000 pips last year. That's what I made. And I look at this and I kind of kick myself and I'm like, geez, if I would have been trading with this grid, that wasn't available last year, but if it would have been, I probably would have made close to 60,000 pips. That's a big difference. That's a really big difference. Huge difference. This year, I'm up almost 4,000 pips. Well, if I would have had this in my hands, guess what? I'd be up almost 8,000, 9,000 pips. That's a huge difference. So at the end here, in probably about 10, 15 minutes, I'm going to give you guys an opportunity, if you haven't yet, I'm going to give you guys an opportunity to get this in your hands. Sam, that's a good question. I'm not 100% sure. But soon, I believe soon. Are you guys starting to see, for those that don't have this grid trading strategy, are starting to possibly see the reasons why you might want to think about getting this in your hands, especially if we could get it in your hands with no risk to you, have you test drive this thing for 30 days, right? I mean, I think that's about as fair as you can get. We're saying this should double, triple your profitability, and we're going to potentially give you 30 days to be able to prove that. I love that. I love when we do that, because here's the thing. I'm a big fan. First of all, we are who we say we are, which is so important. I mean, we've got a ton of traders just making a lot of money. Target traders, leveling students, Josh's trade cop here, killing it. So I love it. We are who we say we are. But what I also love is the fact that we're willing to, for a lot of things, we're willing to kind of take the risk over from you and say, hey guys, you know what? Listen, it's either going to be awesome and you're going to love it. It's going to double, triple, your performance. Or guess what? You know what? Get all your money back, but use it for 30 days and see what we could do. I love that, because then you don't have to rely on what Tyson says, right? Rely on the proof isn't seen in this business. And I'm a devout man of faith, and my proof is in believing in my faith. But in trading, the proof isn't seen. And so I want you guys to be able to see it, not just hear it, but actually see it for yourself in your own trades, right? Type in a wire yes if that's fair. Is that fair? Gary, absolutely. Thanks for typing in your phone number. I do only have 11 spots. I will say this. I'm going to show you guys a strategy, a free strategy I'm going to give you guys today. I'm going to give you guys a free strategy today. It's a great strategy. By the way, it's a strategy that's one of the first strategies I actually started trading that helped me really kind of launch my career and kind of helped me started making money. I only have 11 people in this room that we're going to be able to still offer the satisfaction guarantee to with the lifetime grid. So I'm going to go through the strategy. I'm going to give you guys as a gift. I'm going to give it to everybody. But if you want to jump in front of the line, I've already got like 4 of you that have typed in your number. Christopher, thank you. Prakash, thank you. And Gary. If you want to make sure that you don't lose this opportunity and jump in front of the line and kind of have that risk-free opportunity, that test drive. Doesn't guarantee you're going to be one of the people. It doesn't mean we're swiping your cards. It just means you'll be one of the first we reach out to. All I want you to do is just simply type in your number right now. I'll go through all the details here at the end, but I do want to give you guys an opportunity to jump in front of the line, do what's called first right of refusal, just so, you know, possibly, I don't want you guys to possibly lose that opportunity if it goes away. So if you want to jump in front of the line, and again, I'll go through the details, simply type your number in with the word me right now. And Lennox, I got that. Thanks, Vern, Prakash, and Christopher. Thank you. Okay. So let me show you a strategy here. And again, I also want you guys to understand that if you type your number in, one more time, I need to make sure this is verified. It does not mean you're swiping your card or you're automatically signing up. It means that you understand that this is basically, it's kind of a challenge that I'm going to throw out to you guys to challenge us. I believe this should double or triple what you're going to make in the next 30 days. I think that every trade you have on right now and every trade you place in the future should probably be placed with the grid. I seriously mean that. I can't think of a reason not to. But anyway, I will go through the details here in a little bit. All right. So remember the things we're trying to answer as traders. What we're trying to answer as traders is the three core questions, right? Which direction, where to, and where am I wrong, right? Which direction, where to, and where am I wrong? Well, this is a strategy that I don't know if I can say I developed it. I don't know anybody else who used it before me. I actually came up with the combination. I'm not going to take credit for it because it's maybe traded by somebody else out there. I have no clue, nor do I really care. I mean, I'm not in this business to take credit for things, so I don't really care about that. But I do know it's worked well for me. It's been very profitable. It's more of a swing trading method. I would highly recommend this. I would highly recommend if you want to trade a strategy like this, the best way it's going to work is off of the grid, for sure, bar none, off of the grid. In fact, it'll take a really, really good strategy and turn it into a great strategy if it's traded with the grid. Now, here's the thing I need to constantly ask myself, and as a trader, I constantly ask myself this. Obviously, where's the market moving? That's the first thing. But type in a why or yes in the question section if you know that not all trends are created the same, right? There's good trends and there's bad trends. Now, I have to say this. There's always a trend, right? I mean, I hear from probably once a week, I hear from traders that try to challenge me and try to say, wait a minute, Tyson, you know, what about sideways? What about consolidating markets? Well, yes, okay, the markets can consolidate. Yes, the markets can go sideways, but they're consolidating within some sort of trend. There's always more of a bias, either more of a bias up or more of a bias down. I want everybody, please confirm that you understand that. We should always be, if we had to make a decision, we should always be able to say we should be more of a buyer or seller. And now again, it does not mean that it's a high quality trend. It doesn't mean that it's a good trend, but there's always more of a trend, either up or down. Now, one of the best ways, one of the easiest ways, one of the most consistent ways that I know of to define a trend is using something that's been around for years and years and years and years and years and years and years. It's the 200 period simple moving average. Now, this is a great way to define trend, not because I say, but because the market has kind of self-fulfilling prophecies that happen. And the 200 period daily moving average is something that a lot of traders look at. A lot of traders look at. It's referenced in a lot of hedge funds. It's referenced in a lot of traders have this on their screen. And the more traders that look at it, the more it respects that level. So it's kind of a self-fulfilling type of prophecy. Price is going to respect it. As you can see here, it's not perfect, but you can see that price tends to be somewhat rejected when it gets to this black line is the 200 period daily moving average. Type in a wire yes if you can see that price has, you know, struggles when it gets to at or near, and then when it struggles for a while, then provides like a breakout level, right? And a lot of times what's called supply and demand will form around those levels, okay? Now, that's the first thing. What I want to do is I want to know, I use this, and I still use this in my trading. I don't use this exclusively, but I use this kind of as a tool to kind of bounce ideas off of. But what I look for here is this, very simple. I look at current price and I look at the 200 period moving average. And all I ask myself is, well, where is price in comparison to the 200 period? And if price is above the 200 period, even by 1 pip, then we're in an uptrend. If price is below, then we're in a downtrend. It's that simple. I need to be more of a seller if we're below. I need to be more of a buyer if we're above. So that's step number one. Step number two is I need to have a way to define a quality trend, right? And so one of the best ways that I've found to define a quality trend, and I'll take a little bit of credit for this. Again, I mean, if somebody else has done this before me, then awesome. They get the credit. I just haven't seen anybody do it. But one of the best ways to define whether a trend is high quality or not is using what's called a Keltner channel. Now, a Keltner channel, I don't want to confuse you guys, but really all it is, it's very simple. It's a very simple calculation. It essentially takes a simple moving average, which is just the average price over a certain period of time. So in this example, it takes the 21-day average price. So this little black line right here is the 21-day average price. It's the average price. If you just add up the last 21 days, that's the average price. And then it puts 1.5 average true range, 1.5 average daily ranges below, and 1.5 average daily ranges above. That's it. That's all it does. That's how it creates the band. So these bands, this red is always above the 21 period, and this blue is always below. That's it. Explain the T line. I'm not sure what you mean by the T line, John. So it's essentially, so this is, again, all it does is it takes a standard ATR below 1.5 times ATR above. That's it. So I look at that band as an indication of whether we're in a high quality trend or not. What I'm looking at this for is I'm looking at my 200 period as my trend, and then what I want to see and what I define as a high quality trend is when both bands can trade above. This is a high quality uptrend when both bands, the blue and the red, are above the 200 period also. So a high quality trend, uptrend, would be price and both bands above the 200 period moving average. Type in a wire, yes, that makes sense. Very, very simple. So basically this entire time we've been in a high quality uptrend. It's very simple, right? So what is our jobs? If we're in a high quality uptrend, what is our job? What are we paid to do? If we're in a high quality uptrend, our job is to buy at a low price, right? To buy low and to sell high. If we're in a high quality downtrend, our job is to sell high and buy low. So how do I use all of this information with the Keltner channels and the bands and all that to indicate we're in a high quality uptrend and at a low price starting, and it's time to start to buy? The way I use that is when price and both bands are above the moving average, and then price starts to close beyond the lower band and then trades back in, like right here and right here. That is my indication that we are now at a low price in a high quality uptrend, and it's time to start buying. Type in a wire, yes, if that makes sense. So when price closes beyond the lower band in a high quality uptrend and then closes back inside the band, at that time we then target, we go long and target the opposite extreme band. So this trade up here would have a target of 109.54. That's where the target is, right there on the original trade. And so this trade here, traders are currently long with a target of 109.54, and the stop on this original trade went below the most recent level of support, which is down here. And so traders are currently long, should be, I've been talking about this for the last couple of days, should be currently long with a target of 109.54 and a stop of 106.05. because we're at a low price and a high quality uptrend, and now we've gotten to close back into the band, telling us it's time to now continue this uptrend, and we want to target the opposite side of the band. Type in a wire, yes, that makes sense. So this trade here is good. It's already in the trade. It's already, if you wanted to get in this trade right now, you could actually place your stop here, below here, and this is the way that I would recommend you getting in this trade. All right, let me just show you. Use Josh's, and you guys will get this if you're one of the group that's able to get this in your hands. Use Josh's formula, right? We take a 500 bar 1 hour chart. So I would take a 500 bar 1 hour chart, measure the high to low. So that's about 325 pips. So I'm going to take 325 times 3 divided by 2 divided by 10. Set up a grid that's 49 pips wide. So a 49 pip wide grid using the formula. So here's how I'd set this up. I'd go matrix, 49 pips. I want to buy and sell. I want to buy above and below the market. My stop is going to be 106. I'm just going to go right below that pivot, 106.42, because that's the new support level. My target, 109. If you're already in this trade, you can move your stop up to 106.42. My target's going to be 109.54. And 1, 2, 3, done. All right. Type in a wire yes in the question section if you understand why this is the trade that I like and I want to be in. This is a trade that I'm already in. High quality uptrend, close within the band. Now all our job is to trade it to the outside, the prior outside band since the first close in. So up here was the first upside band since that first close inside. Stop below here, just trade the grid. This trade here, so you know, if you trade it with the grid, should offer about 171 pips of profit, so 171, or we'll just say 170, but we should get 2 or 3 times that, right? Trading it with the grid. And so this trade should produce, you know, right around 350 to 400 pips. We'll say 340 pips minimum profit, trading with the grid. Cool. Yeah, it runs on a daily chart. I could set this up on a daily. Now you got to remember, I did the grid formula based off the 1 hour chart, right? All right, let's do that again. Let me see if there's anything setting up. Okay, right here. Okay. What do we got here? This one isn't a textbook one. Doesn't matter. Are we in an uptrend? Meaning, are we above the 200 period moving average? Yes. Are we in a high quality uptrend? Well, I mean, I don't think it's all that high quality, but it doesn't matter. Both bands are in fact above the 200 period. Now they might go below the 200 period soon, but they are above. If this bar closes with the both Keltner channels above, then we've now closed within. But the problem is, I apologize. I apologize for this. This is not ready. This is not ready. I apologize. Why is this not ready? Can anybody tell me? Have we gotten a close in a high quality uptrend outside of the lower band yet? We have not. I apologize. This is not ready and probably won't be ready. So therefore, don't look at it. I don't want you guys to look at anything that's not going to produce any profits or produce any trade. Now, unfortunately, the only other ones that are going to be ready, and it's probably not going to happen anytime soon, are the euro pairs. The euro pairs are ready. They've got a trigger, right? We're in a high quality downtrend. Yep, we're sitting at a high price. The price is either going to continue to break out, or it's going to be rejected because we've now got above the 200 period. So it'll be rejected off of that. And if it trades back within the channel, then we'll look to go short. Again, if it doesn't trade back within the channel, well, then you never take a trade if you're not in this trade. So wait for a trade back into the channel. Almost all the euro pairs, by the way, are setting up the same way. Euro Aussie. high quality downtrend if we get a trade back into the channel. Trigger the grid, Euro Swiss, high quality downtrend if we get a trade back within the channel. Trigger the grid. And then the last but not least, one that's not quite ready yet but might be ready soon, is the New Zealand dollar, which, by the way, it's probably not going to, so I'm just going to get rid of that one also. I will share this workspace with you. These are the ones, these are basically the only 4 that are either currently active or about ready to be active. Type in a wire yes if you understand that. Okay. And yeah, I'll share this with you. All right, weekly. Now, weekly, I use slightly different settings on the weekly. I use a setting of a 13 instead of a 21 period Keltner channel. I use a 13 period Keltner channel, and the reason why is because 21 weeks means nothing. 21 weeks means nothing. 13 weeks actually represents something. 21 days represents almost a month worth of price action, so it makes sense on a daily. It makes sense on a 1 hour because 21 hours represents pretty close to a full day, right? But 21 months, or weeks, I mean, means nothing. 13 weeks does mean something. 13 weeks represents 1/4 of a year, right? It also represents, 13 is a Fibonacci number, so is 21, but I use a 13 period on a weekly. So these are the trades that are currently setting up right now. Does anybody remember the pound New Zealand trade? Remember this trade? The short down to 75.13? Yeah, well, watch this. This trade, if I wanted to trade it with the Keltner channel, first of all, are we in a high quality downtrend? Yep, we're in a we're below the 200 period weekly. We're both bands are below the moving average. We're now trading above the upside, which tells us we're in a high quality downtrend. We're overbought in a high quality downtrend. So if you wanted to wait, conservative traders, what would you wait for? You would wait for the next weekly close back inside of the Keltner channel, and you would short. Your target would be the opposite side of the Keltner channel. That's it. That's all you do. Now, why would you want to do that? Well, I mean, we can look here and realize that we had buying opportunities back here. I could show you time and time and time again how this works brilliantly, but I don't have a ton of time. But anyway, pound New Zealand is ready, getting close to trigger on a weekly. You wait for that close, weekly close. So if you're wondering how long will this take, well, it could happen this week. It could take a week or 2 or 3. Who knows? But I can tell you this right now, we're getting overextended. You guys probably have heard of the 7 to 11 rule. We are 1, 2, 3, 4, 5, 6, 7, 8, 9 bars, 9 weeks into this move since the last low price. Do you think we're maybe looking for a high price? Yes or no? So if I had to guess, and I'm not in the guessing game, but if I had to guess where this move and turn inside the Keltner channel is going to happen, it's probably going to happen within this week or next week. This right here is probably going to be your next high price. Now, we don't know for sure. All right, next. Almost all the pound pairs are setting up the same. Pound dollar is not quite ready. I'm going to get rid of that one. That was not ready yet. Pound Swiss isn't ready either. Give me a second. I only want to save the ones that are ready. That's not ready. Okay, pound Aussie. Anybody see something interesting? Should. High quality downtrend, close outside of the Keltner. This week, if we can close back inside of the Keltner, then your target needs to be this lower side of the Keltner down here. Set this up as the grid. So let's say hypothetically, I want to show you this, and then I'm going to let you guys get this in your hands. Let's say hypothetically, it was, you know, Friday and we closed within that Keltner channel, right? So my target would be 159.14. My stop would go above the most recent level of resistance right up here. And so this is how I would trade it. I want to show you this. I would use a daily grid. So watch this. This is how it would look. I would do the, I'm sorry, not a daily. I would use a 4-hour grid. The daily just gives me, it's just too wide, too big of a area. So a 4-hour grid gives me 1,190 pips. So I do the formula. So I take 1,190 times 3 divided by 2 divided by 10. I need a grid of 178 pips wide on the pound Aussie. So now I'd go here. And this is how I would set it up. This is just hypothetically saying that we closed within that Keltner channel. I would sell 178 pips. My stop would be 172.03. My target would be 159.14. I want to sell both sides. There's my target, done and done. Type in a wire yes if you clearly see my job is now done. I need to sit on my hands. This is if we close within. I need to now sit on my hands and let the market do what it's going to do. And this trade, if I were to take it right here, but this, as an example, this trade will generate like almost 1,000 pips. But by trading this with the grid, I'll be able to turn 1,000 pips into 2,000, 3,000, maybe even 4,000 pips, depending on how it gets down there. Yep, you can use Bollinger Bands. Bollinger Bands are very similar. Keltner channel is a kind of a smoother version or smoother type of band than the Bollinger Bands. Bollinger Bands are based off of standard deviation of certain periods. So more of the volatility, whereas the Keltner channel is based off of the trading ranges, average trading ranges over certain periods of time. So they're similar. Bollinger Bands are just a little more volatile. So you guys see how this works? How cool is this? This is pretty darn slick, isn't it? Let's go into a couple other ones. All right, pound CAD, same thing. All the pound pairs are starting to basically look the same. Okay, pound or Euro New Zealand. This is a trade that's currently active. I'm currently in this trade. Here's how I'm trading it. My target, the original trade closed within. So this is going to be my last one, and then I'm gonna share this with you guys and invite you guys. I got 11 spots of people that are going to be able to get this in your hands. Jill, I think that's by preference. I would say, you know, I mean, I would disagree, but you know, I completely understand why you would say that. There's a lot of different channels. There's people here who love moving average envelopes. There's people here who love zigzag envelopes. There's Bollinger Bands. There's all kinds of stuff. I've consistently in my trading career, I've traded all types of stuff. I've consistently went back to the Keltner channel simply because it's a smoother of most of them. But they're all doing a lot of the same stuff, just so you know. So don't trip over like, oh, what's the best band? Well, a lot of it's measuring the same type of price movement, just in a little bit of a different way, right? So they look similar. Okay, so does everybody understand why this would be my trade? Sell down to 45.62 because that was the original close. Stop above the most recent resistance level. Target down there. So here's how I would trade this. Let's bring in the 4-hour. This is going to be my last one, 4-hour. 500 bar. Let's do the calculation here. Watch this. High to low, 975 bars times 3 divided by 2. So my grid needs to be 146 pips wide. So now I'm going to go here, matrix, both sides, above and below. I'm going to sell 146 pips, right? 146 pips. My stop loss is going to be 157.60. My target's going to be 154.62. In a count of 3, I am done. So I have now set these three trades up. By the way, Euro Swiss is setting up also. It's not quite ready. Pound CAD setting up, not quite ready. And Euro Aussie, that's not ready yet. Okay. So on these three trades, if I actually set these three trades up, I'm looking to make this is on pure like more swing / position. I'm looking to make 950 on the pound, the Euro New Zealand, 1,000 on the pound Aussie, and about 1,000 on the pound New Zealand. So over all of these trades, I can make about 3,000 pips if I traded this as a normal trader. As a grid trader, type in a wire yes if you understand my expectations are like 6,000, 9,000, maybe even 12 to 15,000 pips trading this on the grid. Yeah. Guys, I'm serious when I say this. Every one of you, I want you guys to accept my challenge. Every single one of you should place every trade for at least the next 30 days, because I think if you do it for 30 days, you'll do it for the rest of your life on the grid. I really do. Now, it's 30 days after the course. Now, here's what we're going to do. For 11 more students, we're going to allow you to get this in your hands. It's not 30 days starting today. It's 30 days after the first day of the course. So you have a full 30 days after you learn it, after you go through the strategies and all that. Okay? Trading on the grid is essentially instead of taking the trade. So the best example I can give you, the difference between a normal trader and trading on the grid is the pound New Zealand. This is a perfect example. A normal trader is going to sell and make 720 pips. Trading on the grid, you're going to sell, and regardless of how it gets down there, you can make 720 pips literally 3, 4, 5 times. The idea is it should help you double, triple, quadruple your payout. Now, I only have 11 more people that are going to be able to get this in their hands. And I personally, if I were you, I would not wait to type my phone number in. If you haven't typed your number in yet, it is first come, first serve. What you're going to get a couple bonuses. Most importantly, we're going to give you 30 days to basically get this in your hands, test drive it, and you convince yourself. It's not what Tyson says or Tyson convinces you. It's you convincing yourself that this is awesome. Especially, I got to tell you, if you are a leveling student, a target trader, or a mastermind trader, you have to have this. I am telling you, this is going to make your job and make your life so much easier. You're going to get more pips. You're going to win more trades, and you're going to take less time, which is so important to me. So Josh is going to be, this is Josh's creation. He's the one that's created this. For you leveling students, it shouldn't surprise you that Josh created something like this. I mean, he trades this style, and he's been doing this manually. Imagine how much time this takes managing 3, 4, 5, 6 trades and setting up, 5, 6, 7 trades at a time. It takes hours. Now it takes literally a click of a button. I'm done. He's also going to teach you a set and forget no-brainer strategy. What that strategy is this. That strategy is go to any chart. He's going to teach you this, the step-by-step formulas. Go to any chart, do the formula, set it up, and you don't even really need to know anything about analysis or direction, and you set the grid up and you got like a 90% success rate. It's crazy. I didn't believe it until he showed me. I spent about an hour and a half with him last week, and he showed me this in his office. I'm like, man, what in the world? He showed me example after example. I'm like, good Lord, this is awesome. So here's what you're going to get. If you're one of the 11, we already got like 139 students that went into this, but if you're one of the next 11, then you're going to get the 4-hour class on demand. You'll get the lifetime retakes. It's going to come with 3 strategies. So Josh is going to go into a specific position, swing, and scalp strategy. And each one of those strategies comes with kind of a way to define direction, set it up and all that. And then also comes with a no-brainer style, meaning just go to a chart, set it up, and let it do its thing. I personally am going to trade this using the way that I normally trade. Imagine target traders, for example. Imagine you have a target 500 pips away, but let's say the RSI isn't in the, let's say it's 500 pips above current price, but the RSI isn't in the buy zone. Well, what do you got to do? You got to wait, right? Well, being a grid trader, on the next release, you're going to be able to have an activation rule. So instead of having to sit in front of your computer screens and wait, you'll be able to set it up where you'll say, hey, I want to trade to this level, but I don't want to trade until the RSI goes into my buy zone. For example, if I trade the Kellner channel style, I could set my grid up right now. Like, for example, on this pound Aussie, I could set this up and the grid wouldn't have triggered once the next release is out. The grid won't trigger until it closes inside the Keltner channel. Imagine that, guys. That's coming out in the next release. Now, I've got a couple bonuses. For you guys that go into this, I'm going to give the next 11, I'm going to give you guys some bonuses. But your expectations need to be able to optimize any strategy. If you can answer the 3 main questions, which direction, where's the market moving to, and where are you wrong, then I believe you need to place every trade from this point forward on the grid. I personally need to take every trade on the grid. Mastermind students, leveling students, and target traders, I believe this is like a no-brainer, like a must-have. Now, here's the bonuses I'm going to give you guys. For the next 11 students, we got 11 left, but the next 11 students are going to get 2 additional months of Josh's fill-in-the-gap sessions. Now, these are going to be 4-hour sessions that he's going to do once a month. And essentially, the purpose of these is 1, to trade and to get additional, grid trades and grid setups, but 2, really make sure that you are setting up the grids right, that you're setting them up with the right set and forget strategy, with the right directions, all that good stuff to really help increase your probabilities. And so this will normally come with 1 month. You guys, the next 11 are going to get 3 months. Here's the coolest bonus, and one of the, honestly, it blows me away that we went all weekend and all of Thursday and Friday, and we still have 11 left, but we have 11 people in this room right now. On top of the 139 that have already went in this, but 11 people that are going to be able to get the grid if you decide to go into this. And let's say over the next 30 days, right? Because I'm going to give you a 30-day money-back ironclad guarantee, 30 days to test drive this. When you type in your phone number with the word me, and if you decide to go into this. Now, let's say that over those 30 days, after the 30 days, you decide that this is awesome. You want to keep it. Well, that's a good thing, right? That's good for both you and us. But what's most important about this is that this is eventually going to be a subscription service. So what you'll have to do in the future is you'll have to buy the class, you'll get the grid for like 6 months or 9 months, and then after the 6 to 9 months, you'll have to pay a monthly subscription, a reoccurring subscription fee to keep the grid. Now, that's a really good business decision on our end, but it's a really crappy business decision on your end. If you can get this right now for the next 11 people, if you can make a decision to go into this, test drive it for 30 days, and if you love it, then you only have it, you only pay for it once, and you never pay for it again. You never have to do a subscription service. That's the way to do it. So for the next 11 students, here's what I'm going to do. I'm going to give you the bonus of the trading sessions. I'm going to allow you to get the grid for the rest of your life, so you won't ever have to pay a monthly subscription for it. You'll get it forever. When we go to a subscription model, and other people are paying $100 a month for it, you're not paying $100 a month for it because you were part of the initial group that got it forever. That's going to be awesome. But most importantly, here's the deal. If you haven't done this yet, if you haven't talked with your education specialist, if you haven't jumped into this, all I'm asking for is just simply type in your phone number with the word me. Have a conversation with your education specialist. We're willing to give you 30 days after the course. You're going to learn it. You're going to learn from Josh. He's going to teach you. He's going to put on a trading session. It's going to be great. And you're going to have 30 full days to test drive this. And you're either going to conclude yourself that this is everything you've been looking for, or you get all your money back. It's that simple. Now, here's the way it all breaks down. If you were to just go out and call your education specialist up right now and say, hey, I want all this. I want this in my hands. It would cost you, normally this would be a value and a retail price of $54.85, but we still have 11 people that are going to be able to get the early bird discounting pricing. And so for the 11 students that type in their phone number, and when you type in your phone number, I want to make sure you understand, it doesn't mean you're automatically signing up. It doesn't mean you have to go into it. What it means is you potentially want to be one of the 11 left that get this in your hands, get to trade this risk-free for 30 full days. Because if you think about this, the money right here, this $22.45, in my opinion, that doesn't matter. Because what matters is the 30 days. Because if for some reason over the next 30 days, if you're not convinced, then it didn't cost you anything. But if you are convinced, then you've just convinced yourself that it's worth every penny of that. Now, I don't want some of you in here, I know some of you look at that and like, oh, man, I'm not sure if I can afford that, or I'm not sure if I can spend more money. Listen, it's not about the money you spend. It's about the return on the investment you make. You got to ask yourself, are you going to get a return on this investment? And you know what? I can't, honestly, I can answer that question myself. If I were in your shoes, I would say there's no doubt in my mind I'm going to get a return on this investment. But again, I don't want you guys to take my word for it. That's not what I'm asking for. I'm not asking for you guys to take my word. What I'm asking for is 30 days for you to convince yourself of it. Because if you don't convince yourself of the value of $22.45 over 30 days, then guess what? You've lost nothing. You get your money back. You get your money back. There's no questions asked. You get your money back, and it is what it is. So from my standpoint, with the bonus of being able to test this out for the launch price cheap, for being able to test this out, and if you do convince yourself that this is everything you've wanted and this is awesome, then you're going to receive it. You're not going to have to pay for it ever again. You won't have to pay the subscription model. Because of all those bonuses with trading sessions and all that, and because of the fact that I have just told you that every trade you take should be taken with the grid, and you should expect 2 to 3 times more profit. That in itself should be worth you taking this for a test drive. That right there. So I want to thank those that have typed in their phone number, and then I want to encourage everybody to do the same thing. And Patricia says, well, I'm a scalper. Oh, that's great. Well, let me show you a scalping method. Patricia, I can show you a scalping method that works very, very well on this. But I want to thank those. Denzel, thank you. AK, I got your number. Thank you for that. Ron and Kasaba, thank you. I've got your number now. We've got 11 spots, so make sure if you type in your number, make sure you answer your phone. It's very important. Talk with your education specialist. Now, again, I could sit here and talk until I'm blue in the face all day long. I don't care whether you trust me or want to take my word for it or not. It's not about me. It's not about trusting what I say. It's about taking the 30 days and you proving it to yourself. That's really what it's about. And some of you have heard me say that, I've got a standing rule with my wife. Not to say I have a bunch of rules, but one of the rules I have is I take advantage of every risk-free opportunity I can. Because from my standpoint, if it's truly risk-free, I might come to a conclusion that I need this. That's just from my standpoint, okay? So here's the deal. This also works. This also works on a 60-minute chart. So can anybody see what's something that's going to be happening? In fact, something that did happen literally in the last hour. Yes or no? 200 period, 21 period Keltner channel, high quality uptrend. Anybody see? Anybody see anything interesting? Well, what if you would have taken this last high quality uptrend long opportunity? Yes or no? If you would have bought right here, would you have made money up to the outer Keltner channel? Yes or no? So what do we think is going to happen here? Well, let me show you what is more than likely, probability says, is going to happen. I'm going to just show you this real fast. 140.33 is your target. Whoops, I'm sorry. 141.14. 141.14 is your target. Your stop will be down here. I'll say 140.10 will be your stop. We've already closed outside and then back inside. And so if I were taking this trade, now I am not a scalper. I want everybody to understand this. I am not a scalp trader, but if I were, then I would use a 5-minute bar, 5-minute 500 bars to calculate my formula here. So I would take low to high on this. We got 260 pips. Whoops. So I'd take 260 times 3 divided by 2. So I need a grid of 39 pips. So now I'd set this up. I'd buy both sides, 39. My stop is 140.10. Done. There's the grid trade. There's only 2 grids on this because we've got such an aggressive move. But this doesn't just work in dailies. This doesn't just work in weeklies. This can also be done in 60-minute charts, and you can use the formula. By the way, look at the last 2 trades. Outside, inside, target. Outside, inside, target. Type in a wire yes if you're starting to see what I'm saying. I'm going to give this to you. I'm going to share this. It's going to be called 60-minute MA Kelt, daily MA Kelt, and weekly MA Kelt in my expert workspaces. I'm going to share this with you guys. Now, the only thing I ask in return, Only thing I ask in return is if you plan on trading this, I highly recommend you trade it with the grid. Do not trade this. Do not trade this just by itself. It's fine by itself. It's going to be infinitely better with the grid. So what I would ask you to do, if you are not a grid trader, I can't make you do this, but I would hope that I want you to accept my 30-day challenge. That's all I ask. Accept my 30-day challenge. Give us 30 days with the grid. If you want to trade this strategy or targets or whatever strategy you want to trade, it doesn't matter. But place the trades with your grid. And over the next 30 days, it's real simple. If you don't find yourself making 2, 3, 4 times more pips, then get your money back. That's really the thing we're asking for. It's this. We believe the grid will double, maybe triple or quadruple the pips that you normally gain. If you gain 6,000 pips over the next 6 months, if you trade with the grid, that's 12,000 to 18,000 pips. What's that worth? Well, I think it's worth testing it out for 30 days and seeing if it's actually real. It's real. It is real. It's real. I actually had a trade, short-term trade today as a test that like it was perfect. It was amazing. Traded it with the grid. It was awesome. It was super awesome. So again, I want to thank those. I've got 11 more people in here that are going to be able to take advantage of the 30-day risk-free guarantee. But after the 11, we're done. So again, I want to thank those that have typed in their phone number. Jamie, I've got your number. Frank, thank you for your phone number with the word me. Thank you for that. For those with a small account, listen, you can trade a small account. You trade micros. You don't need a large account to trade this. Just trade micros. Over the next 30 days, you don't even need to trade it with real money. Yeah, trade a demo account. Remember, the next 30 days, you're just proving to yourself. Take the next 30 days and don't make the next 30 days about making a ton of money. Just take the next 30 days and make it about proving that this is going to increase your profitability. That's it. And then if it is, jump for joy and thank the Lord that you have it and you get it forever, right? That's what I would do. So Georgine, thank you. I've got your number. Franklin, thank you. I've got your number. Aaron, Jeff, thank you. I've got your numbers. Now, 11 of you in here are going to be able to get this in your hands. Never have to pay for it again. Never have to pay the subscription model. All I'm asking for is for you guys to type your phone number in with the word me. Talk with us. Have a conversation. Worst case scenario is, you know what? We part and we say, we can't get you in it. Best case scenario is we have you test it for 30 days. You love it. You walk away saying, man, this is awesome. I'm going to double, triple my profitability over the next year. That's where I think you guys are going to be. So I'm going to keep this open for a few more minutes. I will share those workspaces, okay? I will share those workspaces. They will be called 60-minute Celt, daily Celt, and weekly Celt. I will share them within the next 10 minutes, and I'm going to keep them up probably for the next day or so, but I'm not going to keep them up long. So if you want to save them, you got to open them up and save them on your workspaces. But that's my gift to you guys because I'm excited for all you that have upgraded into the grid. For you that haven't, this might be one of the last times you see this, one of the last times that I give you this as a gift, and probably one of the last times we offer the 30-day money-back risk-free guarantee. So I'm going to end here. If you haven't yet, simply type your phone number in with the word me, talk with your education specialist, see what we can do to get you into this. And on that note, we'll talk to everybody very soon. Georgine, thank you. Frederick, thank you. Ellen, thank you. I've got your number. Hey, Sarah, thanks for that. Thanks for that note. You have a great day, and blessings to you all, as always also. So, all right, everybody, I'll keep this open for 2-3 more minutes. You still have time to type your number in with the word me. And on that note, we'll talk to everybody very soon. Thanks.